For me, one is, in terms of spin-offs, what Tesco is going to do. But the other question is growth in Asia, right? So where do you see the biggest positives?
Well, I think the biggest positives are about the UK. I mean, the fact is, a year ago you would have thought Tesco's business would be declining at a faster rate than it is. Now, let's get this straight. The business is still declining. It's just declining less than we thought. And so those challenges are still severe. I mean, ultimately, you still have the fastest space in this market, which is generally an oversupplied market now on many counts, is coming from Aldi and Lidl. And most of these guys, the likes of Tesco, etc., still run huge stores. So in that sense, the fact that they're getting the house in order a little bit in terms of better availability, having better ranges in store is clearly helping some short-term fixes. Long-term outlook still quite cloudy. Interesting you raise the question about Asia, because that is the growth vehicle, supposedly, for this business. And I just find it really interesting that we were kind of told early on that Tesco would not sell Asia, for example. And now you're talking about private equity bids potentially for Korea, and this is family silver. I mean, that tells you that the business thinks the profitability is going to be low for a long time, and the balance sheet, therefore, at this level does need to be shored up. And, you just have to wonder then, beyond hopefully getting the UK right one day properly to a decent level of profitability, how does this business grow?
It's interesting you say, well, hopefully getting the UK right someday at a profit. That's step one, isn't it? I mean, forgive my ignorance here. That is step one, isn't it?
I think, mind you, this business is, and the whole industry now is facing a fairly severe structural challenge. So, we were thinking, look, this business is making a 1% margin right now, more or less, on its UK business, which is terrible. This business used to make a 6% margin. And we're talking about targeting 1%, 2%, 3% and hopefully staying there, really. So we're going to be a lot less profitable than before. Right now, the ambition is just about to be flat with last year, which was an annus horribilis. So yes, all this stuff we're celebrating actually is flatlining at what was a really horrible year last year.
What would you do if you were in charge? So you got through 12 months.
I know.
You're at the head of Tesco, not doing too badly. What's the next step?
I think the really radical decision here is the problem Tesco has is there's a lot of space here that, frankly, is underperforming. There is way too much exposure to large stores that are underperforming.
Superstores.
And too little exposure to convenience stores. The only caveat I'd say, and this is why I struggle with the UK grocers, I just think they're in a bad place. I mean, the fact is, even convenience stores, I think, you're getting to the stage where everybody's falling over each other to open convenience stores. So yes, they're supposedly the new nirvana. I could point out to you several neighbourhoods in London itself already where you have 2 or 3 Tesco stores, convenience stores next to each other. Sainsbury's is there, Waitrose is there, Whole Foods is there. That doesn't sound like a format that's going to win a whole lot of success for all these companies either. I frankly think the next issue is going to be convenience stores. Not only that they're hitting the existing superstores, but there's too many convenience stores eventually as well.
Well, then that takes us to the online proposition, which is if we're not going to the superstore and you and I are falling over one another in our neighbourhood between Tesco, Waitrose and mini Sainsbury's,
yeah.
Fran and I just defect completely to online. Is that the proposition?
Well, that's certainly the hope, and the hope is that rather than go to Sainsbury if you're Tesco, you actually buy off Tesco online. And certainly they are leading the market in that front. And in some ways, at least Tesco are better than Morrison's. Morrison's were much later.
But how do you win share online? If you're already leading, how do you build on that? Is that what he should do?
It's one of the things he should really do. I think some of it is simple fixes, which is what he's doing. I mean, let's face it, the fact is, I don't want to overdo this either. This company is the market leader in this market. A lot of us do shop by location. You do go to the store that's nearest you. And Tesco still has 30%, slightly shy of 30% market share. So some of it is simple fixing. Stuff just wasn't in the stores when you went in, and that's what he's done. That's the easy bit. The problem from here, you're absolutely right, is the incremental space that's opening up against you as Aldi and Lidl. Now, that tells me that you have to compete even harder to actually keep people from going away. Forget about winning market share, which basically means margin struggle.
All right, Rahul, thank you so much for that. Rahul Sharma, their founder and managing director of Neev Capital.